Okay, folks, welcome back. This is our midweek review for November 20th, 2019. All right, so we're looking at the dollar index. This is the, again, trading view version of the cash index. All right, so you guys always can see the symbol I'm using. And it's going to be a brief review because I just don't see a whole lot to jawbone about. So either it pans out or it doesn't. But it looks like the old high I was referring to before as a potential catalyst for a turn and rotation lower. It's been supported with the bearish order block. I kind of want to spend a few minutes on the rationale behind my expectations for the remainder of this week. So that way it kind of provides the context, because I know some of you are going to be asking, if you haven't already asked in email and I haven't gotten to yet. Some of you are actually very impatient. I said this before, I get a lot of emails and I have to go through them in the order I receive them. So sending me multiple emails doesn't push you to the front of the line. It's very disrespectful, because you're assuming that you're more important than the folks that have reached out to me prior to your inquiry or your concern. Again, I'm the brain trust here for anything technical for the market. So I'm the only one that can field your questions. I'm the only one that can respond. So like I said, I'm a one-man army, one-man show here in regards with that. So you have to be patient. And I understand it can be really frustrating, but that's the nature of this. I have a lot of folks that ask me questions, and they are just as important as you are. So again, when I open your email, I already know that you're going to be asking specific questions, and I try to lace the commentary with more or less, I'm trying to be preemptive about what I'm going to most likely create in terms of questions, and any new questions that I already know that you're going to ask that aren't really important as much as you might think they are right now. They're not as important as you may believe or hold fast to in terms of the level of importance or urgency. If you think that this is the thing that's holding you back, many times you're going to find later on that it really isn't. It's just a distraction. There's other things that will unlock many of the hurdles if you just study the other things that are around the content, because none of you are actually spending the adequate time in each month's content, and you should be going back and cycling through it. There's a lot of answers and a lot of depth in the lessons and the commentary and the videos, and not just the 8 videos on the top of each month. So, and again, there's other archives of the weekly commentary. That's where the real magic happens. It's not the monthly lessons. Okay, so that's just as a reminder. But again, I'm just saying that with all due respect. Some of you are just really impatient, and some of you are just plain rude, and you're insisting that I should have already responded to you because you emailed me 4 or 5 days ago. Well, I'm in a week 3, okay, queue. So that means I have emails I still have not gotten to 3 weeks ago. So that kind of like puts you're in there somewhere, and I get to you eventually. And that's why I said try not to send me too much of a time sensitive question unless it's absolutely urgent, like account issue, like you can't get in or something like that. Always send an urgent title in your email when it has to do with your access, or if you're having technical problems. That way myself or my staff will help get those expedited quickly. It doesn't mean immediate, it just means that they take precedence over every other email. All right, so the point in saying all that was that why I believe what I'm about to say is what I'm going to cover right now in terms of what was the lead into it, what do I feel presently, and what do I believe is going to unfold going forward. I mentioned that this old high here is going to be a barrier. It's a likely barrier. Even when we were using Ava demo trade, the demo account for Ava trade, that old high back here was the same issue. I felt that, we could be met with a significance in terms of resistance or an unwillingness to go higher. And as I mentioned in the last video, and I appreciate your patience because I had used a black background. I put a watermark in the videos, and the colors didn't really match up to what I was using for the MT5 background. So we've got that resolved now, so that way when I get people sharing my videos and we capture them, I can go in and see who they are by way of the company I used to pick up the backgrounds, the watermarks. So even though you don't see them, they're there. And just as an update, I've removed 7 people last month for sharing and providing the videos to other groups, and then that group was trying to start their own individual mentorship, charging the same amount of money that I charge. So they're fools. I don't know why they try that stuff, but eventually they get caught and they get banned, and then they send me mean little email saying that I'm a jerk. But they all knew coming in that this is what's going to happen. So if you're doing it, I'll get you eventually. And anyway, the high in here, okay, I like the fact that we had resistance there. It was unwilling to go higher. We moved down aggressively. We have this single candle here. Now, I don't look at this single candle as a fair value gap that will see us go trading into it here and then go higher. I already know some of you are looking at that as a possibility, and the fact that we're in this down close candle series of down close candles making it a bullish order block. We had a slightly lower low here than this here, and everything in a normal environment where we don't have all these failed attempts to go higher and such a sensitivity around this old high, I would elect to see that as a fair value gap and then look for it to go higher. Okay, but because we have this, which is a premium array at an old high after multiple times trying to go higher, breaking market structure, and then we have unpurged sell side liquidity, and we left these really handsome equal lows here. So I don't believe, because of that, okay, and again, I'm placing the most emphasis on the fact that we had these multiple attempts to go higher and then it just couldn't do it and faltered and went lower. And now we have all of the sell side liquidity pools here that are just easy pickings. If this wants to go lower, it should have no problem getting down there. Monday, we started the intraday right from near the high today and collapsed rather aggressively. Tuesday was a rather moot day. And then today, we opened, rallied up to consequent encroachment, just short of it, of the fair value gap in here. And then we've come off of the highs. Okay, so that I like that. I want to see it kind of like roll over and aggressively expand on the downside. I don't see this gap, okay, again, as support. Emphasizing the context around this high here, this old high, and the fact that we've had multiple attempts to go higher and just couldn't do it. Okay, ideally, and as I mentioned when we were doing the reviews around this time, we wanted to see it having an energetic run above that, close this in, this fair value gap, and aggressively make a run to this old high. If it didn't do that, then we would see what we're seeing right here. Go back and listen to the videos because it's exactly what you see in your charts now. It looks extremely heavy to me. That means that we'll probably look to see it go lower. It doesn't have to go all the way down into these lows this week. There's a lot of news for euro dollar on Friday. So Friday might be the big range day of the week. Okay, so we'll see. But ultimately, I liked what we saw here on the dollar index. I like the fact that we went up into the fair value gap. I like the fact that we couldn't even get to the consequent encroachment of the fair value gap. So to me, if this was bullish, it should have had no problem at least getting to the midpoint of the gap, and if not entirely close it up and make an attempt to get through it. Because we have Wednesday, midweek, that leaves the weekly range just Thursday and Friday. And that's not to say that we can't get a lot of fireworks on Thursday and Friday. There's weekly profiles that we cover in the core content that would illustrate the likelihood of those scenarios. But I just think that given the context of what I outlined last weekend relative to these highs, and the fact that we've seen what we saw in the reaction here, I just don't see these highs as important, or I guess the next level of importance over these equal lows. Okay, so I think it's more likely to make an attempt to go lower, clear out the sell side liquidity in here, because we've had many attempts to go higher. It just simply can't find traction to do it. So it's just easy to look for, well, if it can't find anything on the upside, and this is the only thing that's near term for buy side liquidity, these relative equal highs, I don't view that as all that important at the moment. That changes if we get north of this fair value gap. In other words, if we trade through it and get back above it, then obviously I'm most likely wrong about the sell side liquidity pool being the next draw on liquidity. I believe it is, based on what I've outlined in the previous week review and what we see here. And going forward, I think we're going lower on dollar. That means higher prices are in order for foreign currency. Let's drop down into an hourly chart. Okay, so here's our hourly chart. Here's that old daily high from the daily chart. It had multiple attempts to go higher. I like the fact that we had that higher high and then we rolled lower. We have that fair value gap drawn from the daily that's been transposed to the hourly chart. I like the fact that we have all of these lows that line up perfectly for like a trend line support idea. I expect to see that go lower, trade through that. Inside of the daily fair value gap, we have this smaller fair value gap in here, which would take us back up into these old lows as well. Notice we didn't have any willingness to get up into that today. To me, I think that's significant because that's a premium array that it couldn't reach for. And we have relative equal lows in here. That's a short-term draw on liquidity as well. Not a lot in terms of points or pips to get to that. But I just think everything here, we have smooth equal highs in here. They ran above that intraday and then rebalanced. And I think we should see lower prices. That's what I believe for the dollar index. Let's roll over to euro. All right, so we're looking at the daily chart of the euro dollar. And again, the data that I'm pulling for this feed is forex.com. That will be always the go-to when we're looking at the forex asset classes. Buy side liquidity pool, I do believe they'll draw on liquidity still. We have a fair value gap in here. We created it on this candle, and then we traded up through it on Monday, Tuesday, inside day. Really nice drop down into the lower end of that fair value gap, into the high of this candle here. Didn't quite get down to the the close of this candle here, but we definitely came back in and revisited the low of that fair value gap. I expect to see price resume higher. I like the fact that we came down, took out the previous day's low on an inside day. Typically what will happen is if you have an inside day like this, which is this candle's high is lower than the previous candle's high, and this candle's low is higher than the previous candle's low. So the entire daily range of Tuesday was inside of Monday's entire daily range. So it creates a volatility squeeze where it's typically a precursor to a large move. I love the idea of it trading lower here, breaking below that low, because inside days are traded many times on a breakout basis. Traders will put a buy stop above the high and a sell stop below the low, and whatever gets filled first, that's what they go with, and they use the other end of the range as their stop. They got taken in the market on a short, and then now they're being crushed as it comes back off that low. I'm looking for it to expand on the upside, and Friday, again, being the day with the big news for Eurodollar, I want to see Eurodollar trade with a large range day on Friday. I don't mind so much it trading with a small range, but up close tomorrow, Thursday. I want to see trading on a daily basis for Eurodollar to have a bullish up close, and I don't care how many pips it is. but I'm anticipating the largest of the ranges to be Friday, and I want to see it on the upside. Okay, I'd like to see it trade back up to this low, and that's 111.22. We'll call it. Yeah, that's the level I'm looking for. 111.22. That would be a reasonable expectation for the week if it can find the traction to do that. That would essentially close in this fair value gap, and I'd like to see it trade north of that, and the buy side liquidity pool with these equal highs. That's what I'm aiming for. Let's drop down into a hourly chart. All right, so here's our hourly euro dollar chart, and we had relative equal lows left intact on Monday. They took those out today, and it had initial equal lows intraday. So we wicked down below that fair value gap. That's what these lines are here from the daily chart, and we had a willingness to go higher. We are just short intraday when we trade up to this on this candle's high at 110.81. The equal highs here, they did not see those purged, so we had a really small daily range in here, even though again we went below Tuesday's low. Look how much activity we saw there. So I want to see that kind of theme continue going into London tonight, and I want to see it expand on the upside. It's problematic if we lose today's low. There's really no reason for us to go lower than today's low. In other words, Wednesday's low or this low here. We don't want to see it trade below 110.53. Okay, so 110.50 mid figure needs to keep euro dollar higher. All right, let's just look at it like that. We had, again, a very quiet week, so we have a potential consolidation week with a Friday expansion. Okay, so a reversal or expansion on Friday. That's our weekly range or profile we're working with now. So nothing really impactful. It's terribly small in terms of a weekly range. It's really, really small, but again, we're looking for the large move to occur on Friday. So let's roll over into cable. Okay, so here's cable. It's our daily chart. The near term buy side liquidity pool I still believe is this one here, and then ultimately we're looking for a draw into this area here, preferably by Christmas. That's what I'm looking for. It doesn't mean it has to happen by Christmas, but that's the time horizon I'm expecting this to require to get up there, because it's just, well, it is what it is. I don't think there's going to be a lot of excitement until we get around the first or second week of December for cable. And zoom in a little bit here. All right, so we initially ran the short-term high here on Monday. I sent that by way of Twitter, and I just wanted to provide a means of open accountability, because there's a lot of sentiment around my Twitter feed. Always, like, I'm always right every single week. There's always something I'm right about, but I'm not always right. And I wanted to communicate that, because there's a lot of people that aren't in the mentorship and still hold a very high opinion of me, and I respect that and I appreciate that. But even though they're not a part of the mentorship, they're still benefited by me being as transparent as I possibly can. And if I get something wrong, I don't mind sharing it. I want to be honest as I possibly can and share what I can without actually showing mentorship. Even though I gave a lot of details in that chart, I could care less, because 90% of it's going to go over their heads. But the takeaway from it was that I was expecting something to unfold in the charts. It didn't. It was a missed opportunity, but then our analysis got in sync with what we were expecting to see, which was the next buy side liquidity pool and that being rated. So Monday offered an opportunity to take a position, but we've had a consolidation week still with this one as well. And let me give it a little bit more for this pair. All right, so here we have another scenario just like we saw on the euro dollar. We traded lower than the previous day. Even though this candle is not an inside day compared to Monday, we did trade lower, and I liked how we responded off of that. The midpoint or mean threshold of these consecutive down close candles takes us right into here. We didn't even get down to that. So the mean threshold of the bull shorter block didn't even get traded to. we're still working inside of that large candle here, which starts the order block. So we had a small little gap in here. We came down, filled that in. Price is permitted at this point. If it wants to go higher, it has no reason to wait around for it. It needs to start doing it immediately tonight into London and start to drift and grind higher, reaching above into this buy-sell liquidity pool, and then expanding towards, over the coming weeks, up into 31.96. All right, so that's what we're looking for. And let's drop down into an hourly. So here's an hourly chart. Again, here the Monday move running into the old high. Let me zoom out a little bit so you can see it. So our equal highs had buy-side liquidity resting above that. It purged that, started consolidating. We broke down, came back up, retrace, optimal trade entry, relative equal lows in here with a fair value gap. Let me zoom in into that area again. Equal lows with a fair value gap, which is being delineated with this high here, 128.90. We traded down into that multiple times, and we want to see this expand higher. This type of structure, I don't think usually sees this and then a rollover. I don't see that. Even though we have a fair value gap that is completely open from consequent encroachment midpoint of the gap to the low end of the gap here with this one single up move, which is a BISI, buy side imbalance, sell side inefficiency. I don't believe they need to come down and close that. It's better if they don't even go below today's low. We want to see that stay intact for pound, and we want to see it start to grind higher. Sentiment for British pound will be bolstered on the buy side if we don't make a run below today's low. If it just starts going higher and higher and higher, that'll be good for a prolonged move into the daily objectives that's just recently outlining. We'll look at a 15-minute time frame. You're probably saying, well, why are you looking at 15 minutes for this one, Michael, and not on Euro? Because I want you to look at the short-term buy-side liquidity pool here. And look how many times we try to go lower. Here we go. Once, twice, 3 times, each one being slightly higher. We had an imbalance. We came down, rebalanced that. So all of this consolidation, what does it need to do to go higher going forward for London? Okay, what would I be looking for? I don't want to see any of the drop-down Judas types events. I want to see it actually go higher and then a slight retrace into London. So in other words, I want to see basically the Asian session create the low of Thursday. That's what I want to see. And then a small retracement in London and then expansion higher. That's what I would prefer to see in London. If it does not trade that way, I won't look at it as an opportunity. Okay, in other words, it doesn't fit the criteria that I would expect. So what I just gave you was one more algorithmic principle based on what's in play and how the market structure is in right now. And it's 5 o'clock. Well, it's about to be 5 o'clock. Let's see. Yeah, 4:59 p.m. my local time. So I don't want to see a down Judas swing of any major magnitude. I want to see everything start from Asia, just continuously move higher, and then retracement between 2 o'clock and 4 o'clock in the morning, lower, but not taking out the Asian range low. And I want to see it expand from that. That's the profile I would expect and feel comfortable trading with British pound. And I think that's going to be it. I will provide you another, this one coming this weekend will be a little bit more detailed in terms of homework, so that way you'll have something to work over the weekend with. And I will share with you on next Wednesday's video what you should have accomplished with the homework. Okay, so you'll have that in addition to the weekend review. We're winding down, folks, in terms of volatility. I know it doesn't sound fun, but that's the nature of things around here. You know, that's the markets typically do. They will have gyrations in movement, but the huge and the big moves and the powerful explosive price moves, our expectations diminish as we go into December. And again, as a reminder, this typically is the last week that I would engage with real money, and I would just move to the sidelines. And I just don't want to oversell it to you all, because you can develop your own parameters. You may elect to trade all the way through the year, okay? And don't let me, distract you from doing that. If you want to do it, then that's fine. I'm just being consistent about how I've been doing it for years. I don't believe in pushing it too hard, and I think there's periods of the year that's just really good not to be trading, and we're entering that now. So I believe that is it. If anything pops up noteworthy, I will send you a link with a chart, but other than that, that's what I'm looking for. That's what I'm expecting. Just really the focus this week is Euro on Friday. Okay, so if I get anything of any importance or significance, I will send a chart to the forum for Eurodollar tomorrow evening, probably right about at this time, 5 o'clock, my local time. And so that way you guys can take a look at any charts or annotations that I make with the Eurodollar for Friday's trading will be included at that time. Okay, so enjoy the rest of your week. Be safe, and I will talk to you this weekend by way of the weekend review. Until then, wish good luck and good trading.